Do you remember last February when Goldman Sachs came out with that crazy report about how there were 4 US cities that were going to experience a 2008-like housing crisis? You know, that report that made national headlines, and it really fueled the fears of so many consumers. And they believed that buying real estate in 2023 was going to be an awful investment. The reason I bring this up is for two reasons. One, because we're in very, very similar economic conditions. We're experiencing a lot of the same pressure on interest rates that we saw last September. And really last September was the data that they used for that Goldman Sachs report that came out in February. And then two, because we just got the latest Case-Shiller Home Price Index report. And this is like the gold standard for most economists as it relates to home value tracking. And it just came out and showed that we are over 5% appreciation from last year. And so why that's important to you is because, you know, the housing crash people are back in rare form. I am seeing headlines that say the median home price just fell 2%, and I'm seeing, wave of foreclosures about to come. In the comment section in a lot of my videos, there's tons of people who feel like it's an awful time to buy and that there's going to be these huge discounts in home prices in the future. And as a professional that works in this, I'm just not seeing the data that would support that. But I do really feel the concerns of affordability and how expensive home prices are and home mortgage payments are for the consumer. And so I wanted today's video to really just kind of break down some of this data, but then also give you some tips on what to do if you want to invest in real estate but really feel like it's unaffordable. So there are a couple terms that I think are very, very important for you to know as a consumer when you're reading headlines about real estate. The most significant, I think, is the median home price, because that's the one that I've just seen recently is getting the most attention. And so the median home price literally means the middle number between the highest and lowest sales price. So it does not mean that it is the average of sales, right? So most people are buying at this price. It literally is the middle number, which means that 50% of sales are higher and 50% of sales are lower than that middle line number. There could be one middle line purchase price, but it is the median number. And so when you see that the median number fell 1%, what a consumer will understand or interpret is that, home values fell 1% to 2% depending on the headline. Now, why that is deceiving is because if you look at any of these economic reports that keep track of home prices, right, you will see that they're anywhere between 5 and 7%. 5 and 7% is a significant amount. It means if you bought a $400,000 property last year, you just earned $20,000 in equity, right? If you were going off of the lowest, which is this Case-Shiller report, right? That just came out on Tuesday. Now, that's a pretty significant return. Most people's down payment are anywhere between 3 and 5%. So if you put down 5%, that's 100% return on your down payment in 1 year. Now, if you were somebody that thought that home values were going down, you would be less motivated to purchase. But if you actually look at the data and saw that you would have increased 100% of your money, would that have changed your opinion? The next concept I think that's important to understand is, and it has to relate to value and price. Now, when somebody lists their property for sale, it's based on an opinion of value from the real estate agent. The real estate agent pulls all the recent sales, compares your property to the properties that have just sold, and then it tries to anticipate for where the market is at today. But it is just like an initial, hey, this is what I'm willing to sell my property for. Now, depending on the type of market that you're in, some buyers will pay under or over that price, depending on how competitive that is, right? But a list price is not the value of the home. Now, when you're looking at the value of a property, that is a look back number, and it's an average, or it's an add subtract model based on the houses that have sold within the last 6 months to 12 months, depending on the time period. Typical appraised values will also take into account what market conditions are doing. So if home prices are increasing or declining as part of that overall valuation, but it really is a look back figure. And then the last thing you should know is market price. So what someone is willing to pay to have something today. And the important part of that is to have it today. Now, it's really, really important that you understand the difference between these three things, because This is why it's so difficult to understand where the market is headed. But market price is important because people are willing to pay different things based on urgency. So the best way to explain this is like, if you've ever had to buy an Xbox during Christmas, and don't come for me if that's not the latest gaming device. Every year there's some new gaming device or some new piece of technology that everyone wants to have, and manufacturers know this, and so they issue just a limited amount of them. And so at holiday season, you will see something that would normally sell for $700 go for $1,500, maybe $2,000, because people want to have it first. And so market price is different than value. Like that gaming system was never worth more than $700, but somebody was willing to pay higher than that. When it comes to what people are willing to pay, just know that overall dictates the direction of where the market is headed, up or down. And in this market right now, because we have such low inventory of houses, which means that the number of houses that are available on the market is under what the number of people that want to buy it, we're not seeing any pressure on prices, even with these high interest rates, right? So we are still seeing that home values are actually increasing, albeit not as high as we saw in 2020 or 2021, but we're still seeing a pretty significant amount of increase despite the pressure from rates. So in order to properly get your arms around market price, you have to understand supply and demand, and that would mean that you have to understand how much inventory is available for you to purchase as a homeowner. And this is why it's so important to work with a real estate agent, because a real estate agent's job is to know this for your specific market area. But essentially, if you were basing your information on the recent headlines, you would think that there are more houses coming on the market than there were last year. And if you look at it, it's like weird because I saw some headline that said that there were 436,000 homes available for sale. And when you look at the demand, right, that would be a little over 7 months of supply of houses. Now, with that kind of data, you would assume that it would be a balanced market, but would lean a little bit closer to it being buyer favorable. And in my professional experience, I am just not seeing that. Mind you, that is a national statistic. But when I dug into that information a little bit more, I realized it was including all of the new construction properties that haven't even been built yet. And if you're looking at the number of properties that have been built, I think they said there's like 76,000 properties that were completed, which would be under a 2-month supply. And that is super low inventory for the market. And that is why we are seeing no give in home values. When demand is skewed like that, right? Like, yes, interest rates are super high. Yes, less people can afford to buy them. But when there's such limited inventory, right, there's still more than that in buyers. And so until that changes in a significant way, we aren't going to see a real big significant change that will be lasting to home values. And when I'm referencing long-term change, what I'm looking for is a persistent decline and something that lasts for longer than 6 months. And the reason I'm bringing that up is because I actually do think that we are in very, very similar times as we saw last year. So we are seeing a peak in interest rates, probably not the peak, but a peak in interest rates. They're at the highest levels. We've seen them pushing against that for the last couple of weeks. And we are now going into this season where there will be less unemployment because of seasonal jobs, and there's a lot of spending, right? So I don't see that there is going to be any foot off the gas, unfortunately, in higher rates for the short run. Now, when we saw this happen last year, we saw interest rates peak right around November. And then between November and January, we saw a more than 1% reduction in rates, and we saw a big flood of people enter back into the market. Most people had their best months at the very beginning of the year this year. My expectation is something similar. I think that we will peak in interest rates based on the economic data that's going to roll out with, jobless claims and spending. And then we will see that start to correct towards the beginning of next year. The thing I want you guys to remember is that when interest rates got higher last year, we did see a pullback in market price, right? So what people were willing to pay to have that house today, because they didn't need to move, we saw a reduction in market price. Now, was it a reduction in home value? I did not see that, as people were buying homes paying less than what they were worth. And that means you're getting a deal, not that you're getting screwed. What's hard is just to understand what something is worth. And so if you look at that same house that they bought a year ago and it's worth more than 5%, they've done really, really well, and they got that property at a discount. That happens right? When there are market conditions that would again decrease the amount of demand. So I think that there's a likelihood that that will happen again, and that, you know, the end of this year might be the cheapest time in terms of price that you'll buy a property. Now, I'm not clairvoyant. I can't guarantee any of this, but this is my best professional guess on what will happen in the next coming weeks. And I obviously will keep reporting if any of that should change.